You're looking over here right now at the S&P 500. This is in yellow. And then below, you're looking at over here the Fed's balance sheet in purple. I have this box of when quantitative tightening started, the day that it started, and then the day that it ended. And if you're looking at what happened, here's the S&P 500 when it started, and here's where it ended. Is it higher or lower, right? Now, one could say that it's pretty much sideways, which is pretty much along the lines of our expectations, but it is higher. It is also important to note this drawdown over here. This is December 2018. This is when Powell basically was forced to verbally pivot. This is when the Treasury Secretary Mnuchin called up all the banksters, and not the central banksters, the regular banksters, and was like, we need your help. That's when President Trump tweeted, it's probably a good time to buy equity markets over here. And that verbal intervention is very important. But it wasn't over here until September 19th when quantitative tightening stopped. And also over here when the repo market started seeing the purchases started increase on the balance. And this is when we went into the melt-up phase. This is when we went into a melt-up phase on the equity markets until things broke. What's very interesting, before we get there, if you look at the NASDAQ at the same time, it's the same thing looking at the S&P or NASDAQ for this almost the exact same thing. So I'm just using the S&P 500 over here. I want to throw up Bitcoin really quick, but before I do, let me show you the key. This isn't a tweet coming out tomorrow, but let me just show you here what I believe. This is very important. Yesterday, I gave you 3 parts of the session where to really pay attention. So for today, this is number 1 for this session. All right. So let me go ahead and get rid of this because I have this. I need this for the Bitcoin, so I'll pull that up in a second. What I want you to see over here, it's when this is what I believe. We're going to find out in real time whether my hypothesis is correct or not. But right now you see as the Fed, and by the way, let's call it as it is, the vast majority of the market participants did not believe that the Fed could or would taper, and they did not believe that the Fed could or would hike rates. That's number 1. Number 2, a lot of people, now that they're hiking rates and finish the taper and are getting ready to start QT, they're like, that's it, it's over, it's broken. Now, here's where I believe is the best, most important signal to understand that the party is close to over. And it's when things actually break. When things actually break is when the Fed begins lowering interest rates. This is the Fed funds over here, not when they're raising rates, right? Again, plenty of liquidity out there, Fed raising rates. When they sense trouble in the markets and they begin lowering them, and then over here you can see this impulse of the expansion of the Fed balance sheet. It set off that sharp move up, but and when things break, by the way, PS, that's when they cut to zero really, really quick. This is the height of the crisis, and it's because they're cutting rates to zero to go ahead and start the next impulse of QE. If you go back further, if I go back to 2008, right? Boom, 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 boom. Boom, 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 boom. 2004 rate hiking cycle begins. Look over here as we get towards the end. This is where they begin lowering interest rates. Then you see the melt up occur over here, and then they go down to zero really quick. That's when you're in the middle of the crisis, and then impulse up. So for me, I know everyone thinks the party's over. For me, I think the party's going to be over when they start, and they've only had 25 basis points in. Whether or not it's 3, whether or not it's 9 hikes this year, I have no idea, but I believe they have a lot further room to go. Could the Fed be raising rates to push us into a recession? Yes, I think that's exactly what they're doing, is trying to stop. Once inflation gets way out of control, it's already out of control. Once you start seeing a loss of faith, it spirals out of control. The Fed right now, I do believe, is purposely trying to force a recession. It remains to be seen. If you remember what we said over here going back into March, April 2020, people were looking for an insolvency event. We said the Fed acted. It's enough. It's more than enough. The next crisis will probably be ready when they're ready to introduce the digital dollar. They will create the crisis and then introduce the CBDCs. Now, here's the thing. I don't think that they created this crisis on purpose. I think that they had to do what they had to do, which was flood the system with liquidity. The government started handing out the stimulus. Inflation started running hot. It messed up supply chains. And then we're seeing the damage of the supply chains being disrupted now cause even higher inflation. And now we're seeing, obviously, war, people cut off from certain aspects of the banking, causing even higher inflation. So now the Fed, they need to, I don't think they're orchestrating it. I think that they're reacting and they need to try to slam the brakes on. And then they feel that, you know what, we could they'll be able to deal with what they need to deal with later. If there's a crash, Jerome feels confident, as he said a few weeks ago before lawmakers, that they could just flood the system with liquidity and everything will be okay. So I guess what I'm getting at is I'm not so sure they're ready to go ahead and implement the CBDCs, something we're waiting and watching for. All right, let's keep continuing over here.